Welcome to the Swing Trading with Cycles channel. We're going to do our update on natural gas today. It is early in the morning of January 26, 2023, and we are making fresh lows. We've broken the low from last week, and you can see now we've got some clean lower lows, and we're going to get into all of that. If you're new to this channel, definitely take a look at the pinned comment. It'll give you a ton of background info on cycles analysis, understanding swing highs, swing lows, etc. And just in general, I'll just say, I think this is helpful for the whole community. You see people in the comments talk about, well, technical analysis. And I think, first off, it's price action, not technical analysis, but we won't quibble over that. But it's all, energy is all about supply and demand. Price action doesn't work. Like that itself reveals a misunderstanding of what price action is. So first off, all prices work off supply and demand. That's how it works. Like Apple shares are based off of supply and demand too. It's not just a thing unique to energy. The thing about price action is it allows you to analyze a trend. Like when this was cascading lower, right? For people that are new to this channel, there are new people discovering this every day. We've been talking about natural gas in more detail since early December. Right? I took a look at the market, the natural gas market, like, oh, this is kind of interesting. It works off of price action like everything else. Let's see what we can discern here. And what we've discerned is this 50% drop since then. That's not because we knew something about supply and demand specifically or fundamentals. It's because we saw the price was trending lower. And that's what price action lets you do. It lets you analyze the trend. It lets you understand, are prices trending higher? Are they trending lower? Or are they in some kind of range? Because those are the only three things price can do, folks. And that's how you get paid. That's how we make money in the markets. Price going up, or obviously if you're short, price going down. So daily chart for natural gas. Again, take a look at that pinned comment. Take the time. It's like at least an hour of content all in all. So take your time, pace yourself. You may need to watch it multiple times, but it is going to change the way you think about investing because it gives you a data-driven framework, not mumbo jumbo, pseudoscience or opinion about, well, what valuation should we pay? What multiple? That's all great context to have to as a sort of corollary, but you want to understand at a basic level, what direction is price moving in? And so now price is starting to trend lower again, like more meaningfully. Like you can kind of see this big cascade down, this little cluster, and I have a few tools that I'm going to use, just almost like training wheels so you can see it. And now you have the deeper retrace. I'll actually just show that right now. So this is a moving average. So what I did was set up a 1 day moving average, and it's now looking at the lows instead of the close, because that's what a moving average does by definition. It looks at the close. And so you can see more clearly now, right? This green line, right? You had this period where we're trending, you have these clean moves down. You have a little ripple up, clean move down, clean move down, tiny little ripples up. Look at this area. Let's zoom in, right? This is the area we've been in the last few weeks. A lot choppier, right? Meaning, and what this is showing you is the distance up that the lows are from each other, right? And so the steeper the angle, the further apart the lows are, so the stronger the downtrend. Look at this. Look at how clean that is. Now, this is the Thursday candle. It's really early in the morning, so a lot of trading to happen, so this can change. Although I should say this is always pinned to the low, so even if we get a reversal, it'll still be looking at the low. But you can see we've started some bigger downside acceleration. And that's the other thing to understand. Don't get hung up on the candlesticks or charts. Candlesticks are just a tool. They're a visual representation of price range. So they're helping you understand, are people willing to pay lower prices? Are people demanding lower prices, or are they willing to pay higher prices? Right now, they're demanding lower prices, right? And whatever imbalance there is between supply and demand is somewhat irrelevant if you can analyze the trend with as much precision as we do here. So, as I said when we were up here, that there was a magnet down to the 360 area, which was this area right here, right? In this cluster here, generally, we now have a magnet down to this area of price action. So that's right around the sort of 240 level-ish. And we're going to show on higher time frames how that looks. This is a daily chart. And so if you think about the daily cycle, We are on now day 34. So again, if you've been watching the previous videos, and if you haven't, take a look at that pinned comment. Take the time, get caught up, get up to speed. This was a swing low that we had. That's what this line is, right? You can see price was above here, right? It was above this line. And again, the lines are just a visual representation of a price range. Don't get hung up on the lines or the chart. But this was showing us that price had moved up into a higher range momentarily. Notice this close is an ugly doji. We got followed through the next day. This was a green candle at one point. That's important to understand because we know it was a green candle because the wick is all the way up here, which means the body was up here. People were paying higher prices than they were this day, and then it just collapsed. And when it collapsed like this, when we did the video, we said the expectation was that we would break below this low. So that's 3.243, right? Because that's how that generally works. When you make a higher high and then you fail, you get no follow through, you stall out, like almost think of a plane that stalls out, right? You just come crashing down the other side. That does not always happen. Nothing always happens, just in general, and certainly not in markets. Nothing is 100%. But this is a high probability pattern that when you get that, you generally get the follow through. And sometimes it doesn't happen on the same candle, right? Like this is an example where it started with one candle, and this candle didn't even go red yet. It just started to pull back, and then this candle, the second candle, kind of finished the job, right? So you notice this candle makes a higher high, this candle makes the lower low. So you can think of it almost like a compound candle. So the other thing to be clear is we're like really late in the daily cycle now. So this is day 34. The last one ended on day 30. The one before that, day 33. You had these shorter ones, although you can argue maybe this is one big longer one, right? Like if that were the case, that would be 24 plus 41. That gives you a 35-day cycle. This is 37. This was 37 days. This was 39. So we're probably going for something closer to the 37 to 40 range. And we're here at 34 days. Now, price can drop a lot in like 4 or 5 trading days, to be clear, right? And especially if we're talking about, so we're right here at 288. So we're meaningfully below $3 as well as sort of a psychological level. And again, I mean, it's just amazing how, like, again, when we were up here at 6, and I did that Reddit post where I was like, you know, price, there's a magnet to 360. We could see a 40% drop from here. People were like, no way, it's going to be cold, yada, yada, yada. You don't know what you're talking about. The energy markets are blah, blah, like that. We're on our way to 240 now, right? Like we're now meaningfully below $3 where no one thought we could get to. And that's not a prediction, right? It's not about predicting. It's about analyzing the present. And does the present say that we're in a downtrend? Yeah, check. If it does, then we should expect lower prices in the future. Though at the same time, we could get a pretty solid bounce. Now, as I keep saying in all these videos, we could just be talking about a bounce of just 5 days, easily, right? Just 5 days or something, you know, like this was just 5 days. This was just 5 days. But even so, price generally doesn't go down in a straight line for too long. So it's like, think of this as like a move down. At some point, we're going to get something like this, even especially if we're going to get another lower low, right? But right now, it's time to make money. You can make money in KOLD, right? Because think about it. If we're going to move down to 240, and that's the way markets work, they undershoot and overshoot. You could see a world where we actually get meaningfully below that 240 level. And so you could see 20% more downside here. And if you're in an inverse product, that could easily be 40 or 60%. And obviously, if you're trading the futures themselves, that's a lot of money. That's a lot of ticks. So again, meaningfully below $3, though really important to note, it's super early in the morning, right? Like super early Thursday candle. I mean, we still have, we still have at least 12 hours of trading to go. Like put it that way, right? So, and we'll zoom into the lower time frames to see how that's looking. I mean, as always, we'll look at the levels on Boyle and UNG. But I also wanted to just note that we always talk about our weekly levels. We talk about them on every video. So the level that we needed to stay above was 3.091, right? That was the low from last week and our most recent sort of bottom tick. And we're obviously now meaningfully below that. So you notice that's the pattern. We open as an inside week and then we break to the downside, right? Like, you see that? Like, I hope you can see, like, that's what happened this week, right? Because that's where this candle opened. I'll just zoom in, make sure we can all see it. That's where this candle opened here. And so it was inside the range of this candle, but then we broke below it. Then we did the same thing. Inside, broke below it. Inside, now broke below it. So you can see a world where we'll get a similar pattern. So the high on this candle for this week is 3.595, which is way up there now. And we're making new lows now. We still have 2 trading days to go, so we don't know how low we're going to go. But you could see a world where we sort of slow the decline down a little bit, open as an inside week next week, and then make another lower low. Also note this 10-week moving average. At some point, price will cross above it. May not happen for a few months. That would not be surprising. And we're also going to look at other time periods where we stayed meaningfully below the 10-day moving average. And in some future video, we'll look at the weekly as well. And I want to also just kind of look at the yearly chart. So we've talked about this in some previous videos. Like this is the chart of the full, like each candle. Excuse me. Each candle is an entire year of price action. So a lot of detail really just rolled up into one candlestick. Like this big hunking candlestick is the year 2000, right? And then this big red one is the year 2001, right? We had a pretty massive reversal. You can see that wick, we made a lower low. And so what I want you to pay attention to here, and I'll remove all the drawings, all this stuff, so we can just see it nice and clean, right? This, and I'll just zoom in so there's like no ambiguity. Again, that is the power of price action analysis. Because when you combine it, when you're looking at it on multiple time frames, right, you're talking about an entire year of price action. This is all of 2022. So for the entire year of 2022, $10 just about was the highest price, and 3.638 was the lowest. And we've talked about this in previous videos. 3.638. That was the lowest price you could buy natural gas last year, right? That's what this candle is telling us. Huge pattern, a really important piece of data. Now, as we live and breathe, natural gas is trading at $2.88, and this is probably I think this might be the March contract. This is just the one that's NG1 on TradingView. You can pull up a different contract. I'm pretty sure it's the same pattern, so don't quibble about the contract. The point is, we are not just below, but meaningfully below. I mean, let's see. What is that in terms of percentages? 21%. So we're 20% below, meaningfully below the lowest price of the entire year of 2022. Like, you look at that. I hope you can see that. And obviously, we have another 11 plus months to trade, right? So this is a very early candle in the sense that it hasn't fully formed yet. It has a lot to go. A lot can happen. A lot can change. But right now, as we speak, look how much any purchase in last year is way underwater. That's a big pattern. I often say on this channel, the most important signal, or the most important signal you can get from price is either a higher high or a lower low. This, my friends, is a lower low, and it's a lower low on the grandest of time frames. That's not good. And if we think about targets, people love targets. Like, I think of them as zones. We've talked about the 240 level. Well, what do you know? What is the low from 2021? It's 2.414. That's not a coincidence. That's the multiple time frame analysis, right? Because this price action is the same, it's just the aggregation of the monthly price action and the weekly price action and the daily, right? But it makes sense, doesn't it? Like, you could see a world, and unfortunately the drawings are going to come back now, but you could see a world where we end up with this candle drooping all the way down here, right? The same way that this candle was below here, right? And more importantly, or maybe easier to see, the same way this candle is making a lower low than this. At this point, this candle is targeting this low here. So again, that's the 240 area. And as it often happens, markets tend to overshoot. So you can see, and we'll look at the monthly chart. You can see, you can see a path down to like 2.38, and again, once you get down there, then you're kind of flirting with $2 even. I don't know that we get all the way down there, but if there's anything, if there's one really important thing to look at, it's this. I mean, this is telling you something, folks. Like, you can see when we make a lower low, like this is a lower low, and again, these are candles that close as lower lows. To be fair, these previous ones, right? Like, these are complete candles. They're not still forming, but like making lower lows on a yearly basis, that's a lower low. That's a lower low. This is actually 2 years of lower lows back to back, right? And actually, this is a bearish outside year. So that was really bad news bears. So this is something to pay attention to big time. And if we look at that monthly chart, we can see that this is that 240 level, right? And that makes sense, right? Like, this is the candle. Like, this is your 2021 candle. If you just combine 12 of these monthly candles, it gives you that one annual candle. And as I've talked about multiple times, this price action here, price aggregated here, we kind of stalled out here. And so now I've talked about we're potentially slipping into no man's land. Well, there we are. And you can see the bottom of this area is 2.38. And really, if you got down to that wick there, that would actually get you down to more like below 230, right? Actually closer to 225, right? And again, easily overshoot to $2. Doesn't mean we close there, maybe we get a big wick. But man, and that's the other thing about this. You think about from a cycle perspective, this has been a rally of 26 months, right? Like from there to there, right? And now this is the decline, right? The same way that daily cycles have declines and weekly cycles have declines. So this is now serving as a magnet the same way that this, I've removed the line, but I had drawn a line at 360, and that was serving as a magnet because of this pivot, because of this price action, this kind of move. This price action now is kind of calling us. So speaking of that price action, let's zoom into that price action on the weekly just to kind of get a sense for how the weekly cycle decline kind of unfolded. And so for context, this is now week 13. We've had a top on week 4, and so we rallied for 4 weeks and we've been declining for 9 weeks, right? So that's a very lopsided situation, right? Rally for 4 weeks, decline for 9 weeks. Yikes. This was a rally for 7 weeks, decline for 11 weeks. You get the picture. Moving in the wrong direction, rallying for shorter time periods than it is declining. Than it is declining. It's declining for longer. So where is that little cluster of price action? Let's find it. That gets us down to the 240 area. This here. Okay, so let's zoom in. So these are your weekly candles, and so this is an obvious low here, and so where is the next swing high? And so that was 13 weeks, right? But you could say it's really, this is a whole cycle, so that's 27 weeks, and then, well, that's interesting. Well, if that's the case, then this would be a shorter one at 14. So, and that's it. That's the interesting thing, right? Like, that's what we're kind of seeing here, where this was a short cycle at 16 weeks, right? 7-week rally, 11-week decline. This was a long cycle, or this was a longer cycle than this one at 26 weeks. Pretty clear. 23-week rally, really shallow, or not a really shallow, really short 3-week decline, but pretty steep in terms of price, right? Like, what was that decline? Let's just see here. Yeah, so that's a 45% decline in 3 months. So it lasted a very short amount of time, but pretty steep. This was a longer decline from week 29 to week 41, so like 12 weeks. And that was about 45% as well. So this price action here, so that was 27 weeks, and that was a pretty right translated cycle. So we rallied for quite a bit, and then we just kind of gave it all back right there. So that was a 27-week cycle followed by a 14-week cycle. So you could see a world, that's interesting, right? So like this now suggesting to me that this runs for more than 16 weeks potentially. I think the other thing to kind of keep in mind, as we talked about in previous videos, is the way the daily cycle shapes up is going to determine the weekly cycle as well. And so let's just, again, we talked about this in previous videos, but let's just say that we get a daily cycle low on day 40, right? Let's just say, as a scenario, just to put a line in the sand. Then we could get another daily cycle, let's say that's shorter for like 20 weeks, something like that. That could get us to March. And we talked about April being the most bullish period for natural gas. And so you could see a world where it's actually more like a cycle that's like 30, 35 days, 2 longer ones. And so we're getting our low around late March into an April rally. Because again, April tends to be the calendar month where you get the best performance, at least for UNG as a proxy for natural gas. So if that were to take us out to April, how many more weeks is that, I guess, if we think about it that way? So let's say late April. That would be, so you could call it a 21-week cycle. So that would actually in some ways make sense, right? So you have this 41 weeks, 26 weeks, 16, and then maybe something like around 20. In this case, let's say it's 22. And that would potentially be two more daily cycles within a weekly cycle. Again, definitely take a look at the pinned tweet or pinned comment to get more background on the cycle stuff. And this is your 200-week moving average again in yellow. Important to note. So let's look at Boyle and just kind of make sure that we're everybody is clear on the levels on that one. Well, I guess actually the levels on this one are pretty clear. We're making all-time lows. So we closed at, it looks like 852, and obviously with this big move down, we're, who knows? We probably open below $8. Actually, I think KOLD is probably the more relevant one to look at. So this is your inverse. So where did we close? Wow, look at that candle. My God, this was kind of like sniffing out a big decline, I suppose. So we closed at 48.25, and we've talked about how the $70 area looks like where we're headed. And look at this wick here, right? Or I should say that swing low, right? That swing low is at $78 thereabouts, right? So you got this cascade lower, and then you got this really short rally, and that's what actually started this big downtrend. So that this big downtrend, right? And so you could see a world where we could find price somewhere in that zone. You also have this gap here, right? That's the other thing that you want to look for, are these gaps too. Yeah, so that looks like a little bit of a gap there. That's around $59, right? I mean, I think the key here, as we talk about ad nauseum, you want to price making lower lows is the big signal. So the way to ride this would be just to move your stop up, right? Like either at the low of the day. Let's actually zoom into a lower time frame for something like this. So let's look at the if we look at the hourly, man. So and obviously we're probably going to gap open tomorrow because of the moving natural gas, at least based on what we're seeing right now. But you could see a world where we're going to need to hold, we'll need to hold like that level. So 46. So you could easily see a pullback to 46. That would be a lower high within natural gas before another move lower. And that would be, if one's not in, a great place to either get in or kind of reload for the kind of next move up, right? And then, even below that, you've got like this cluster here. I mean, I doubt we're going to get a big enough lower high to bring this thing down to 40, and also have to be aware of, we have to consider kind of where it's going to open, right? But that's the kind of idea, right? Like, and I'll do a further update when we get some actual, open, trading data for KOLD, live, I should say. But again, as we talked about on that, let's look at the monthly chart. You can kind of see that 59 to 70 area, like that's so it's The high from April 2022 is $65. That becomes a bit of a magnet there. I don't know that we get all the way up to 113. I think nat gas would have to go below $2 to get to that, maybe. And also keep in mind, though, super important. Let's look at the daily chart. Let's just be sober about this for a second, too, though, right? Like, let's make sure that we're not getting too out ahead of our skis. This thing has been rallying for a really long time, hasn't it? Right? And when that's the case, you just want to make sure that you're aware. That's why, again, the trailing stop makes sense. So from here to there has been 41 days, right? You can quibble and say, no, I think the rally started there. Okay, fine. So that is 27 days. That's a pretty long rally by any stretch, right? Like, that's a really long rally, especially considering the percentage gain that we've already made. So you certainly can get this burst higher. I mean, clearly natural gas is making a big move lower, so you are going to get a burst, but you just want to be cautious here. I mean, what was this rally in terms of length from there to there? So, okay, that's actually pretty good context. Let's zoom into that one. So let's say, and this is a tough kind of choppy mess to stay long through, but let's say you were able to stay long through that. So from this to that is 40 days, right? And this thing generally is going to be messy because it's, because of the leverage. From this to that. Again, tough to stay long, but wow, that was actually 39 days. So maybe there's something that's interesting. What about this little rally or this big rally? Wait a second. Interesting. That's really interesting. So we're getting to and again, some of these are really ugly, so potentially hard to stay long. But like rallying for 39 days wouldn't be unheard of. I mean, this rally is just off the wall. Like if you go from this to that, I mean, again, like you really say, oh yeah, well, oh my goodness. Well, that's really interesting, right? Like, and this is my first time looking at this. This rally is 39 days. I mean, you could say like really the rally ended there because that's a big swing high. So that's 18, or you could say it ended there. So it's 23. All that to say, the point there is that we've rallied again. Depends on how you measure this, right? If you measure it from there to there, it's 40 days. So we're getting on the long end. If you measure it from here to here, which is fair because this is a pretty big decline. This is a big swing high. It's about 26 days. So, and again, we know the core component of all this is the performance of natural gas, which is clearly accelerating its downtrend. So this thing could have some, like, it starts to give you a sense as we start to move forward of when to start to get cautious. So like, okay, maybe I'm getting greedy here, right? So that's really good. And let's look at UNG, right? Because we know that Boyle is making all-time lows, but UNG hasn't made an all-time low yet. I've talked about this before. Now $8.28 that's on the table. And you think about it. If natural gas is going to make a 20% move down lower from here, well, 20% haircut off 981 definitely gets you below $8, right? And the all-time low is 828. So this thing is probably going to make a new all-time low before this is all over, is the headline. Okay, and so before we close out, I did want to talk about how long we've been below our 10-day moving average. And as I talked about, it's not the specific moving average that's anything special. It's the concept. It's the idea. It's what the moving average tells you, what it signifies, almost, in the sense that you can't cross above a moving average without making a higher high, right? So another way of saying that is going above a moving average is just a proxy to tell you that higher highs are happening. Just like you can't go below a moving average without a lower low happening. It's just a proxy, right? And so we have not closed above our 10-day moving average since December, December 16th was the last day we closed above our 10-day moving average. So that's obviously an entire month. So basically the second half of December, we couldn't close above our 10-day moving average. And now for all of January, we won't be able to. At some point, that's going to reverse. What I wanted to show you is, if you think about like the biggest declines, right? Like if we look at the monthly chart, right? Like this was a really massive steep decline, right? So that is the decline from the 2008 peak. So let's look at what that like. So this is a spreadsheet, and as I said, candlesticks are just a visual representation of this data, right? This is the data. This is data that's just showing us our open, high, low, close, and then we also have volume, and I've added the 10-day moving average here. And so, and this here column H is the distance from the 10-day moving average. And so obviously if it's green, it means we're above, and if it's red, it means we're below. So that real like crazy sort of downtrend started in about July 2008 that we just looked at on the chart. And lo and behold, you can see here visually, boom, it goes really red for a really long time. Now notice, anytime it's red means we're below the 10-day moving average, and this is on a closing basis. So this was 20, what's the count here? Let me get this ribbon back. So the count here is 33 days, right? So that's 33 days in a row not closing below the 10-day moving average. And so that kind of gives you a little bit of a precedent. And you can see there were a couple of days interspersed, but then it just kind of continued, right? So if you wanted to even say, like, how long did we go without closing 3 days above the 10-day moving average? That was actually about, what is that? 51 days. So for 51 trading days, price closed below its 10-day moving average, and wasn't able to close above its 10-day moving average for 3 days in a row. And as we said, 33 days in a row with that like not closing above its 10-day moving average at all. And if we go to this time period here, what do we got? How many days do we have here? This is 25 days. So that just tells you, right? Like that other time. And of course, someone will say in the comments, oh, well, this is not 2008. Of course it's not. It's never the same reason, obviously. Like by definition, declines or rallies always happen for different reasons. Like that's literally that's just a fact, right? Like that's obvious. The mechanics of the decline or the rally can still be the same though. So again, this just gives you a sense of precedent. So we've done about 25 days closing. Actually, I guess this doesn't have, it's been 26 days probably now. So we're getting up to, in terms of historical levels, as sort of deep into a downtrend as we can. Again, this being a proxy for a downtrend, right? Not being able to close above a moving average, being sort of a proxy for making lower lows. The other thing that you would notice here is that we were like meaningfully below it for some periods, right? Like 20%, 24, 20. And you can see the trend has slowed down a little bit, right? That's just because the cascade lower has slowed down. This is a great example of how you can analyze the data of price action without using candlesticks as well. Obviously, candlesticks are a really helpful kind of visual reference. So we'll leave it at that. Lower prices for natural gas. Oil is going to continue to make lower lows. And so I would not advise averaging into oil. I hear people talking about, I don't understand why someone would average into something that's making all-time lows. If you buy something at $10 and it goes down to $5, it's got to double for you to get back to even. So buying on the way down is very dangerous. I would advise wait for the swing low. Take a look at that video in the pinned comment. Wait for the swing low I'll say I wouldn't advise. I would like to wait for swing lows because I like to mitigate risk, I guess I'll say. But because at some point this is going to reverse. I mean, this is a crazy chart, right? This is going to reverse. But like, do you really want to be the one that's buying? Like, do you really want to be the one that's buying here or here or here or here, right? Like, I'd say patience here, folks. Patience. We've got a ways to go on this decline in terms of time, and maybe not so much price, but certainly give it some time to heal. That's all we've got for now, folks. We'll leave it at that. Thank you for watching.